Welcome back. If you saw the last video, you know the basics of the power of three: accumulation, manipulation, and distribution. Today, we're taking it up a notch by going deeper into chart examples to show you exactly how to apply this knowledge. So if you're serious about leveling up, stick around because I will walk you through step-by-step examples that you can start using right away. If you're new here, my name is Wendell, also known as Spektrades. Make sure you guys follow me on Instagram at Spektrades. This is where you can get direct access to me to answer any questions. Make sure to follow me on Instagram at Spektrades. Let's get right into this video. A quick recap before we get into it. The power of three is the cycle that repeats itself in every market. We covered how higher time frame candlesticks are formed by accumulation, manipulation, and distribution on the lower time frames, and why this pattern is crucial for spotting smart money moves. In this video, I'll go over real chart examples to show you how this pattern unfolds in live trading conditions. Each example will highlight unique setups so you can see how versatile this concept is. Plus, I'll share a few tips on reading market sentiment to spot these patterns faster. Let's get into it. Right here for our power of three recap, the first step we have is our accumulation. Our accumulation is where smart money quietly builds their positions in the market moves in sideways. It might look like there is nothing happening, but this is the calm before the storm. The first step is our accumulation. This is where price is building orders. We may call this a consolidation zone also, but price is just moving in a sideways pattern, as you can see. And the second step for our power of three is our manipulation. Then comes the trap, right? The market breaks key levels, triggering stop losses and tricking traders into bad position, which sets up for the next phase. In the next phase, the last phase, is our distribution. Finally, after the trap is set, the real move begins. The market shifts sharply in the intended direction and smart money exits their positions, leaving most traders caught off guard. So right here on the higher time frames, our power of three looks like regular higher time frame candlesticks. But when we scale down to the lower time frames, right, this is where the power of three shows better, right? So for a sell schematic, the first step for our power of three, like we stated, is our accumulation. This is where price builds orders. This is where we see our accumulation phase right here. Price is building orders above and below this consolidation zone. And the second step for our power of three is our manipulation. Well, price will rally higher, as you can see right here, to clear the high from this accumulation. Right here to give us our manipulation phase, to then go lower to give us a breakup structure, and on that retest we'll use this mitigation block right here to push price lower. So we have our accumulation, manipulation, and distribution right here. Accumulation, manipulation, and distribution. This is it in a sell format. In a buy format is the same exact thing. We're looking for price to accumulate orders and then to go lower to give us a manipulation, to then rally higher to give us a distribution. And on that pullback, after price give us a internal range breakup structure, that's when we can place our entry stop losses at old lows or stop losses at old highs, just so we can be safe in targeting opposing sides of liquidity. So this is our power of three recap. I hope you guys watched the last video where I went more in depth into this right here. This is just a brief recap. Now let's go over our chart examples and see exactly how we can use the power of three. And now right here for our first example. Before we get into our first example, I get a lot of DMs sometimes where a lot of people tell me that how hard trading is. I have to tell you guys, trading is really not that hard. It's really truly simple, right? That's why me personally, I try to make it simple and as precise as possible, right? Just so you can just go on your charts and execute this. I usually give you guys everything step by step so you can go on your charts and execute it, because you guys seen not a while ago on how this type of situation me and my brother were living in, right? You seen the bathroom that we were using. You seen our rooms and how we look like, right? If we thought trading was hard, we would have never made it out of our situation. So I'm telling you guys, man, like, just take it serious and apply yourself, right? It's truly easy. We do this every single morning, every single day, and I'm giving you guys the step-by-step framework on how you can go achieving this for yourself. But if we can make it out of the situation that we were in and how bad we had it, you guys can do it even better, right? You can achieve an even greater success than us, right? So as you can see right here, this is our first example, right, of our power of three. Just like I stated, right, the power of three is a three pattern model. We have to see our first accumulation and then the manipulation for the distribution. This power of three model right here goes well in hand for our Asian range model right here, right? I also have a indicator. This is the indicator called Asian. This indicator called range box by nephew Sam. This is all the settings right here. You guys can just copy all of this right here, but this is just shows me all my Asian range. My Asian range is in gray right here. So as you can see, during the Asian range, what happened? Price was accumulating orders, and this is really key right here. So you guys can also take notes. Also, during the Asian range, the Asian session usually always give us our accumulation phase. So if you're a person, right, that can trade the London session, always keep in mind during the Asian session. The Asian session usually builds liquidity above and below, and then during the London session, this is when we have our London session manipulation. So just like we stated, right, the first thing we're looking for is our accumulation. We seen that price accumulated orders right here and left this fair value gap. Then price went lower and give us this old low, but this low right here, it failed to tap inside of this lower time frame zone. Right here is a lower time frame order block. Right here is a lower time frame order block right here. This old low just went down lower and then went higher. We didn't get no firm body breakup structure of this swing high. If you guys remember my last video, the swing high is our 3-bar pattern, is 1 high, 2 high, and 3 highs. This is our swing high right here. So we did not get a firm body breakup structure of this swing high. So this low right here was a liquidity low. We see that price purged lower, tap inside of our lower time frame zone, and rallied higher. This right here is what we call our risk entry. This is our manipulation entry. You can take this entry with your stop loss below this old low right here, but me personally, I would advise you to wait for price to give you a breakup structure of this old high first, because after this breakup structure of this old high, what we see that price come back lower to retest this broken old high. This is a break and retest pattern. As you can see, price broke the old high, retest it, we enter here, stop loss at the old lows, and we're targeting buy side liquidity or any form of old highs on the left of us. This right here, this trade was a 1, 2, 3. As you can see right here, a 1, 2, 3 risk to reward. We wait for price to give us our accumulation, right? And then during the London session, during our kill zone time between 1 a.m. to 7 a.m. for our London session kill zone, we seen that price went lower to give us our manipulation. So accumulation, manipulation lower to then for price go higher to distribute. As you can see, accumulation, manipulation to distribute. All of this is happening during the London kill zone from 1 a.m. to 7 a.m. Eastern Standard Time. Always look for this pattern to happen during a certain kill zone. Now let's go over our next example. Now for our next example, we have another London kill zone example. As you can see right here, right? We have 2 New York kill zone and 2 London kill zone for any traders that trades those sessions. As you can see right here, price gave us this beautiful market maker buy model. As you can see right here, price rallied higher, as you can see, and then went lower to fail to give us a breakup structure of this old low, but respected this zone right here, this demand zone, to push higher and give us a breakup structure of these old highs. As you can see, this is what we'll call a failure swing. Price fails to push lower to give us a swing low, as you can see, but it respected this old zone right here. So as you can see, after price accumulated orders, just like we see, so just like we stated, the first thing we're looking for is our accumulation. As you can see, price accumulated orders right here, right before the London kill zone started, right? We see that price was just consolidating in this box right here, building liquidity below and above this consolidation range. So as you can see, just like I stated, the London kill zone usually always shows us the manipulation side, right? So if you are a person that can trade the London kill zone, I would truly advise you to always be aware where the London kill zone may try to attack the highs or the lows as our manipulation. So as you can see, the first phase is the accumulation, and then during the London kill zone, price pushed down lower to clear these old lows and to fill in our fair value gap to tap inside of our demand zone, to then rally higher to give us a breakup structure of old highs. But us, right, personally, we can take our entry right at this demand zone and stop loss at this old low right here. This right here, this failure swing, is what we can classify also as a SMT. If you trade also GBP/USD, GBP/USD may give us a liquidity sweep of old lows, but as we can see right here on the Euro/USD respected this old low right here and give us a failure swing. So this right here is also a SMT with GBP/USD. In where we're targeting, we're just targeting buy side liquidity highs right here perfectly. So this right here is our second example of our power of three. Just like we stated again, just like I stated, always take these trades during a certain kill zone time. Either the London kill zone between 1 a.m. to 7 a.m. Eastern Standard Time, or during the New York kill zone during 7 a.m. to 4 p.m. Eastern Standard Time. Now let's get into our New York kill zone setups. And as we can see right here is the same exact pattern that we're looking for during the New York kill zone. The New York kill zone is between 7 a.m. Eastern Standard Time to 4 p.m. Eastern Standard Time. As you can see right here, this is what we call a beautiful continuation model. This model right here is a model that sort of usually don't give us a pullback, but I'm going to show you guys exactly how we can use this setup right here to catch us some great sniper trades. As you can see, the first thing that we're looking for, just like I stated, is our accumulation of orders, right? We've seen that price rally higher, right? Price came from this old demand zone right here and then rally higher and accumulated, right? After every rally, we can expect for price to start giving us some accumulation, right? To just build orders above and below. As you can see, price goes higher first and give us a liquidity sweep of this old high, and then build more liquidity right here to then rally back higher again to clear these old highs right here, to then push down lower to give us a market structure shift of this old low. Us personally, as soon as we get this market structure shift, we seen this big bearish engulfing candle right here. As soon as price give us this beautiful break of this old low, because this old low was the low that went higher to give us this liquidity sweep of this previous old high. So now that price give us this break of structure of this old low, the trend has changed. Price went from being uptrend to now going lower right here. As we can see, this candlestick opens up. We can place our entry right here, our stop loss right above this old high, and we're targeting sell side liquidity. We're targeting these old lows, one low or two lows. They could be your first take profit or your second take profits right here perfectly. This trade right here was just a beautiful sell during the New York kill zone using the exact power of three concept. As you can see, accumulation, price rallies higher, give us a liquidity sweep of this old high right here. But this high, right, it failed to push lower to give us a breakout structure of this old low. So as you can see, this low rallies higher again to give us a second liquidity sweep. That second liquidity sweep is very important sometimes, right? Not all the time price has to give you a second liquidity sweep, right? But sometimes it matters, right? Because this right here is a lower time frame consolidation. On the lower time frame, possibly the 1 minute, price was just moving sideways right here, right? On the lower time frame before price rallies to give us a manipulation of old highs, tricking lower time frame traders into believing that they're going long to then push down lower to violate these old lows. And we just placed our trades right here, stop loss at this old high to target sell side liquidity lows. Right, this right here is a beautiful New York kill zone setup on the 15-minute time frame, right? You guys don't need to be going on every time frames, right? Just pick a time frame after you do your top down analysis. After you've gone from the 4 hour, the 1 hour, into 30 minutes, you guys can stick on the 15 or the 5 minutes, right? Just pick one of those time frames and master that time frame. Pick a setup and master the setup. Pick a concept and master that concept, or pick a pair and master that pair. Right, now let's go into our next example. Before we get into our next example, we always have to consider the overall market sentiment. For instance, during major news or around specific economic releases, the manipulation is more common, right? So always be observant when there are news releases, because that's when we can see the manipulation happen even better clearly in how smart money moves. Smart money uses this volatility to create traps. So if you see a sharp spike in price that doesn't align with the overall market sentiment, we have to be cautious, right? Always keep in mind that accumulation and manipulation, those phases, they tend to repeat over and over again. So you can use these cycles as trend continuation signals. Now let's move into this last example. Just like I stated, right, always be observant during news. This is our last New York kill zone setup right here. We are still on the 15-minute time frame, but now on gold. As you can see, right before this 8:30 a.m. news release, right, we have this huge candle wick right here, right? This is our manipulation. What was price doing? Price was accumulating orders, staying tight inside of this consolidation zone right here. A lot of traders, they get lost on the lower time frame, trying to catch lower time frame swings inside of this lower time frame accumulation phase right here. But when you zoom out, right, that's why it's always important to zoom out when you are in doubt. But when you zoom out, you can see that this is a higher time frame consolidation zone. As you can see, price was just accumulating orders right before news release, right? Just like I stated, and during news release, price pushed down lower to clear all the old lows that was inside of this consolidation zone right here, and then to clear this old low right here, to then rally back higher to give us a breaker structure of this old high. Us personally, right, just like I stated, you can either take this turtle soup entry right here, but this is the risk entry. I always wait for price to rally higher and give me a breakup structure of old highs, and on that pullback, we see that price left us this inversion fair value gap. The inversion fair value gap is just a fair value gap that has been violated through, and then price will go back and reuse that fair value gap. Like this fair value gap was supposed to be a sell fair value gap. Price was supposed to tap into it and drop, but price violate this fair value gap, so price will come back and reuse it as a inversion fair value gap to push back higher to give us to go to our original take profit zones. And we have multiple ways we can enter this right here. All of this trade right here is happening during the New York kill zone. I only recommend you guys to take trades during the New York kill zone. Only look for this setup to happen during the London kill zone or the New York kill zone. I give you guys 2 examples for the London session and 2 examples for the New York session. That's all that you need. Make sure you guys study this video over and over again, and every time you see a setup, align it perfectly with this video right here. So this right here is our New York kill zone. Price pushed down lower after we got our second breaker structure of this old high. Also, this is our second entry right here. Boom, this is our second breaker structure. After every breaker structure, price will now start respecting all the bullish PD arrays. So after price give us our second breaker structure of this old high, price pushed down lower to give us a retest of this order block right here, to then rally back higher to clear old highs. But that's it for part 2. Today you saw live examples of accumulation, manipulation, and distribution, and learned how to spot these phases on your chart in real time. I hope this has given you a better understanding of how to trade with the market cycles instead of going against them. If you found this helpful, don't forget to like and subscribe for daily videos on mastering the market. Also, follow me on Instagram at Spektrades if you want more tips, updates, and direct access to ask me any questions. Also, make sure you guys check out the first link in the description for Spark Trade University. Make sure you guys join us and live trade with us daily to see us use this concept live in action and make real money in real time. Spektrades